Cardano ADA's token leads crypto majors lower. Bitcoin nears 41k as bond yield rise. Bitcoin appeared to have led Nasdaq and other risk assets in pricing Fed jitters. At press time, ADA was traded near $1.36, a 10.6% fall in the last 24 hours. Scaling solution Polygon's Matic token fell 6% even as the network implemented Ethereum's burning fee mechanism, which will destroy Matic tokens, making its supply deflationary. Solana's token Sol, Binance's token BNB, and Ether each fell over 2%, while Bitcoin traded 1% lower near 41,200. ADA's decline appears typical of a correction often seen after a notable price rally. The token jumped nearly 60% to $1.64 earlier this month, performing Bitcoin as the impending launch of SundaySwap, the first decentralized DeFi exchange on the Cardano blockchain, revved up investor interest in the cryptocurrency. Pseudonymous Twitter-based ADA Whale said that some of the reasons for ADA's recent bullish momentum was popular trader Kobe tweeting about buying ADA at $1.20 and Cardano winning Ethereum founder Vitalik Buterin's Twitter poll asking the community which blockchain would be a suitable alternative to Ethereum. Cardano is likely going to be in the news in the coming weeks. Keep eyes on the various scaling initiatives coming to Cardano in the next months, Ada Well told CoinDesk in a Twitter chat. Cardano chain is currently running at pretty much full capacity. Block size likely increases by the end of the month. Next month, we'll see the Babbage hard fork, which helps things further. Transactions per second should scale to 500 to 1,000 this year in various ways, the ADA Whale added. And while these impending developments can put a fresh bid under ADA, the cryptocurrency remains vulnerable to continued sell-off in Bitcoin, if any. There have been selective alternative cryptocurrencies that are performing rather well, including Cardano. We don't foresee these holding up very well if we continue this risk-off sentiment. Matthew Dibb, COO and co-founder of Stack Funds, told CoinDesk in a WhatsApp chat. Risk-off weighs over Bitcoin. Bitcoin and traditional market risk assets remain under pressure as bond yields continue to rise on expectations of earlier and quicker rate hikes by the Federal Reserve. Notably, the 2-year Treasury yield, which tracks short-term interest rates and inflation expectations, hits an 11-month high of 1.076% soon before press time. Early Wednesday, Anna Wong, chief US economist for Bloomberg Economics, said that a 50 basis points interest rate hike is warranted at the Fed's March meeting. According to FX Street, the Fed funds futures are currently pricing a 93% chance of central bank raising rates by 25 basis points in March. Policy tightening is bearish for asset prices. In general, some observers are of the opinion that the worst may be behind for Bitcoin. I'm really surprised Bitcoin is holding up while the Nasdaq pukes. In retrospect, the Bitcoin sell-off led the Nasdaq and looks like Bitcoin has found its bottom already while the Nasdaq hasn't, one investor tweeted earlier this week. While the Nasdaq index fell 2.6% on Tuesday, Bitcoin ended the day flat. The cryptocurrency is not doing amazing, having lost nearly 40% of its value since mid-November, as the Fed went from predicting a single rate hike in 2022 to 3 hikes. The tech-heavy Nasdaq peaked after mid-December and has declined over 8% since then, according to data provided by charting platform TradingView. Stack Funds Dibb said the crypto market more broadly is showing some resilience, with trading volumes remaining low in the absence of large bids, despite equities recently heading lower. Dibb, however, foresees a deeper decline if the bulls fail to defend the recently held psychological support of $40,000. The market has been eyeing the $40,000 handle as strong support. However, a close below this area will likely lead to larger liquidations and a grind down to the mid-30s. Looking ahead, aside from the macro factors, the market may take cues from the US House Energy and Commerce Subcommittee review of the environmental impact of cryptocurrencies scheduled for Thursday. In NFT infrastructure moves, OpenSea acquires Dharma. Coinbase partners with Mastercard. The market for non-fungible tokens is off to a strong start in 2022. While this is evident from the increasing number of NFT users and the rising volume of transactions, the recent decisions made by some of the industry leaders further strengthens this perspective. as companies move to make it easier for an average user to buy NFTs. Just yesterday, major NFT marketplace OpenSea announced the acquisition of crypto wallet startup Dharma Labs, while payments giant Mastercard unveiled a partnership with crypto exchange Coinbase to, as they said, simplify the NFT buying experience. OpenSea acquires Dharma Labs to push deeper into NFT and Web3. In an announcement, OpenSea said they are acquiring Dharma Labs to accelerate product development, expand safety and reliability efforts, invest in the NFT and Web3 ecosystems, and grow their team. While details of the deal are undisclosed, a report earlier this month by Axios claimed that OpenSea was in discussion to purchase the initiative for between 110 and 130 million US dollars. Dharma Labs, a nearly 5-year-old decentralized finance protocol, runs on Ethereum and allows users to borrow, lend, and engage with other elements of the DeFi ecosystem. However, as part of the deal, Dharma's app will be shut down and its users will be given 1 month to transfer assets to a different wallet. Per Devin Finzer, co-founder and CEO of OpenSea, the two teams share a vision that NFTs will be the cultural focal point of crypto's adoption for years to come, arguing that the vision can only be realized if using NFTs becomes easy and delightful for the average person. And that's damn straight. I'm sure we've all had problems looking at stuff like CNFT, OpenSea, Rarible. There's issues everywhere. It doesn't make it easy to do it. OpenSea is quite easy, but even then, it's not exactly given to you straight up how you need to get the currency into your wallet to buy this, to buy that. What's the cheapest way to do it? They'll just have you paying fees for the Ethereum blockchain if they can facilitate the payment that way. Nadav Hollander, co-founder and CEO of Dharma Labs, will become OpenSea's new chief technology officer, while the platform's current CTO, Alex Atala, will start a new role as representative for the recently announced NFT security group. As reported, OpenSea and crypto derivatives exchange, FTX US, announced their NFT marketplaces in mid-October. Meanwhile, a new decentralized NFT marketplace, LooksRare, outperformed OpenSea by 4.25x in a matter of days since its debut. Mastercard to bring payments for Coinbase NFT users. In a bid to simplify buying NFTs, as buying a t-shirt or coffee pods on an e-commerce site, Mastercard has teamed up with Coinbase to allow card payments on its yet-to-be-launched NFT marketplace. Currently, users who want to purchase NFTs need to open a crypto wallet, buy some ETH or some other accepted crypto, and then use it to buy an NFT. There are also technical complexities as well as user interface, user experience, hurdles with some of the wallets which make the process even more complex. Damn straight. We're working to make NFTs more acceptable because we believe tech should be inclusive, Mastercard said. When more people are included in new technologies, it spurs innovation, helps economies grow, and expands choices for consumers. Coinbase launched a waitlist for customers interested in its NFT marketplace, which attracted 1.5% of the exchange users mid-October last year. Bitcoin mining energy use inconsequential, rapidly becoming more efficient, says Michael Saylor. Of course he does. And he's right, he is right. The total use of energy for Bitcoin mining is inconsequential, and it is rapidly becoming more efficient. MicroStrategy CEO Michael Saylor says, as the mining industry is preparing for a hearing in the US House of Representatives this week. Saylor was speaking during a quarterly briefing by the Bitcoin Mining Council on Wednesday. According to the CEO, the amount of energy Bitcoin is using makes up no more than a rounding error in other major industries and is negligible when compared to the total world energy use. And he's right. He's completely not wrong. The problem is that other people don't see it that way, and they will compare it to things that are not really applicable and shouldn't be compared to because they don't provide the same utility and value. Relative to the world energy usage, Bitcoin uses about 14 basis points, noting that this is up over the past quarter given Bitcoin's hash rate or computational power has increased dramatically. But just to put this in perspective for those who can't see the screen, Bitcoin's at 140 on this chart for estimated annual consumption a year, and that looks like trillion watt hours a year. And as you can see, Bitcoin is roughly half of gold, roughly half of a banking system, if not even less. Further, the prominent Bitcoin bull said that mining is not only very efficient in its current state, but stressed that it will keep getting more efficient as time goes on. It's already the most cost-efficient major industrial user of energy in the world. It's extraordinary in its efficiency, Saylor said, adding that the important point is it's getting more efficient. In addition to Saylor, Coinmetrics co-founder and Castle Island Ventures general partner Nick Carter also joined the briefing. In his remarks, Carter focused on a recently published misleading memo prepared for an upcoming crypto hearing in the US House of Representatives on the impact of mining, saying that the memo contains figures relating to e-waste from mining that we know to be false. The claim is that Bitcoin mining generated 30,000 metric tons of waste in 2021, adding that this is based on a paper that assumes 1.29 year depreciation cycle for ASIC Bitcoin mining machines. Bitmain's S9 mining machines represents 25% of the network hash rate, and that was an ASIC released in 2016, Carter said, explaining that most mining firms use depreciation assumptions that are much longer than 1.29 years. We've seen in practice that ASICs generally have lasted far longer than most people expected, Carter said, adding that the depreciation cycle nowadays is probably more like 5 years effectively. Also, per data compiled by the Bitcoin Mining Council last month, global Bitcoin mining consumes 3.2% of electrical system energy wasted or lost in the USA in the space of a year. They also claim that Bitcoin mining energy use is 0.142% when compared to the world's total energy. Furthermore, per this data, almost 59% of global Bitcoin miners now use sustainable power compared to nations like Brazil, which uses just over 2% renewable electricity. The USA uses less than 32%, while the EU figure is almost 44%. Additionally, the council added, Bitcoin mining technology has come on leaps and bounds, meaning that the miners working today are now 5,814% more efficient than those working just 8 years ago. Intel inside Bitcoin mining. During the online discussion, Michael Saylor also touched on the recent news that the major American chip maker Intel might launch a new type of Bitcoin mining machine that will have greatly improved energy efficiency. According to the CEO, Intel's entry into the space has the potential to accelerate the energy efficiency of Bitcoin mining, calling it indicative of the vitality of the network and a good thing overall. The new chip, which has been described as an ultra-low voltage, energy-efficient Bitcoin mining ASIC, is rumored to be unveiled during a company presentation on February 23rd. ADALend CEO Kaspars Koskins, starting ADALend CEO Kaspars Koskins interview series, one of the most promising companies that is revolutionizing the lending industry by using blockchain technology to disintermediate the traditional middlemen, providing unprecedented access to loans for those ignored by the traditional banking system and providing high yields for investors in a persistent low interest rate environment. I hope you're as excited for this conversation as we are, so let's jump in. Interviewer. Welcome, Kaspars. We know you're a busy gentleman these days with the public launch of ADALend, lending platform and token this quarter, but thank you for making the time to speak to us today. Let's start at very high level. Can you give us the elevator pitch for ADALend so that those of us who are new to decentralized finance and crypto, or Web3 as they fashionably call it these days, haha, Koskins. It's a pleasure to be here, and I'm thrilled to share with your audience a little bit more about what we're building at ADALend and how they can participate. But first, let me try and summarize to you in layman's terms what our mission is. We're developing a scalable, trustless, and decentralized lending protocol that harbors users within a self-governed environment. From day one, we committed to build natively on Cardano blockchain, which enable the lending platform to aggregate protocols that support business models that give economic support to billions of users. ADALend will bring back the balance of power between the lenders and the borrowers. By allowing the use of digital assets as collateral, the use of the platform will be diversified to the benefit of the user. Oh, thank you for that. Can you tell me a little bit more about why you chose the Cardano blockchain when there are already successful DeFi projects built on Ethereum and new blockchains like Solana, for example? Koskins, certainly. Let me begin by explaining that Ethereum is no longer usable by the majority of people on Earth due to the high transaction. Gas fees in Ethereum have reached into the hundreds of dollars per transaction over the past year. This would be unacceptable to ordinary people in the Western world today, but for billions of unbanked people in the developing countries of Africa and Asia, this renders ETH useless, as they need to lend and narrow far smaller amounts and borrow far smaller amounts. Ethereum has therefore become a layer 2 blockchain for the rich and newcomers. Mentioned like Solana have problems with centralization and reliability. Cardano is the only truly decentralized blockchain with the required security, speed, and low transaction fees required to provide a truly democratic financial solution that can be used by every human on planet Earth. And our vision aligns perfectly with the Cardano Charles Koskins, who is passionate about improving financial outcomes for people all over the world, regardless of race, nationality, gender, or financial status. Thank you. Those are truly powerful words, Kaspars, and we are fortunate to have projects like Cardano and platforms like ADALend that can bring vision of democratic inclusion into reality. So, as well as a mission to do good in the world, many of our readers and executive professionals, small business owners that are managing their own portfolios are wondering how they can preserve their capital and earn a good yield in this hyperinflationary environment when interest rates are so low. People are seeing this as a retirement nest egg or children's college fund declining in real terms due to the frankly crazy macroeconomic environment we find ourselves in today in the US, Europe, and many other parts of the developing world. How can these middle-class, hardworking people benefit from ADALend? Caspar. Well, this is the other side of the coin, isn't it? One of my personal inspirations to found ADALend is that I was working in the traditional retail lending space with credit union savings. I've seen firsthand how people were unable to get a decent interest rate at the bank, were genuinely worried about the futures as prices and the cost of living was rising faster than the salaries. The bank's hands are tied as the interest rates are set by the Federal Reserve in the US and the European central banks in the EU. I began exploring decentralized finance as a way to earn a yield in my own family savings, which led me down a rabbit hole and brings us here today. Our commitment to ADALend lenders is that we'll provide a safe, secure lending platform where they can stake their hard-earned savings in Cardano or the ADALend token ADAL or the form of stable coins like USDT or USDC and earn a market-beating yield on it in the high single-digit or low double-digit percentages. The ADALend platform is highly liquid without long-term lockup, so our lenders will earn interest for the time their savings are staked on the platform and can withdraw at any time. The other side is for borrowers. Many small business owners, entrepreneurs, and the self-employed can find it hard to borrow money from traditional banks to buy a car, pay a down payment of a house, invest in a business, or fund a dream holiday. At ADALend, we didn't do credit checks and we didn't care about salary history. Traditional banks and lenders do not recognize digital assets as collateral. We will provide an over-collateralized lending facility to these borrowers where they can stake their digital assets like Bitcoin, Cardano, or any other major cryptocurrency, and we'll lend them US dollars or euros against their holdings. This will provide crucial liquidity to a large number of hardworking professionals and self-employed people that were previously ignored by the banks. By the way, this type of over-collateralized lending against access has been used by the top 1% of wealthy people in the world to fund their lifestyles and investments and to optimize tax for decades. ADALend is now bringing these financial solutions to everyone that were once privileged to the rich. That is truly a noble goal, and I love to see that you are helping out the middle classes like us, as well as the poorest folk in the world. Let's talk about partnerships, investors, and technology. I understand that DeFi and CeFi, centralized finance, is a highly competitive space, especially before your initial DEX offering IDO in March 2022. But what can you share in the area without all the readers signing an NDA? Caspar, absolutely. You've hit the nail on the head. The space is getting more and more competitive by the day. Other new projects building DeFi on other blockchains and CeFi incumbents like BlockFi. So we need to be selective about what we can reveal. However, I can share some insights with you today. On the technology side, by leveraging the Cardano blockchain, ADALend will be able to tap into the vast digital cash management market by creating a technology that allows anyone to delegate their digital cash and make it available for loan. ADALend is opening up the potential for the blockchain-powered liquidity. We are aiming to be Cardano native in everything we do. and are building the platform using Haskell and Plutus and working within the present limitations of smart contracts on the blockchain. On the partnership side, Input Output Hong Kong has listed ADALend on their essential Cardano list of projects that are considered part of the ecosystem supporting and providing Cardano users with products and services. We are also listed on the Cardano Cube IO, and I know our business development team is hard at work on several exciting partnerships. We'll be announcing in February that will really move the needle, so watch the space. In terms of funding, we were delighted to have a highly respected venture capital firm, Moonwhale Ventures, as our lead investor, and our private sale is almost closed. We're now in a very good position financially and more selective in who will take funding from, as we don't want to favor the VCs over the retail investors as many projects do. We are reserving a good allocation of ADAL tokens for the community also. Oh, this is excellent news, Kaspars. I'm hearing all too often that new crypto projects are providing huge allocations to the VCs who then dump on retail. It looks like you are being far more inclusive at ADALend and giving excellent opportunities for smaller to medium-sized accredited investors to access the private sales that were once preserved for the VC elite. As experienced smaller investors myself, I salute you. After our discussions today, I'm super keen to get involved, and I'm sure our audience is too. Where could they learn more about the private sale, the public IDO launch, and how to get involved? Kaspars. Well, thank you for the kind words, and thank you for the conversation today. I genuinely enjoyed it. Did you? And sometimes I still have to pinch myself when I realize how far we've come in the past year. Sure, we're in the final stages of private sale now, so if yourself, for your readers, would like to apply for an allocation of ADAL, then you can at private sale at ADALend Finance with the subject line CEO interview, and I'll make sure our private sales team responds to you ASAP. You can find more details at our website, ADALend.finance. Crypto miner Argo diversifies into non-mining blockchain business. Argo Labs unit will be funded internally and focus on blockchain-related non-mining projects. Bitcoin miner Argo Blockchain is starting a non-mining business unit called Argo Labs to diversify its business and take advantage of other opportunities in the blockchain ecosystem. We've always felt that the blockchain space has more potential than just mining, said Argo CEO Peter Wall in an interview with CoinDesk, adding that the new business unit will be an in-house innovation arm for the company. The London-based Argo Blockchain has been operating as a publicly listed crypto miner, generating revenue primarily from minting Bitcoin and Zcash. Meanwhile, Argo Labs is still a very early stage project, for which a small team has been working behind the scenes for about the last 9 months and is still building out the entire workforce as it launches officially. Argo Labs will mainly focus on network participation and strategic diversification through the efficient deployment of the company's crypto treasury assets. The network participation will consist of providing infrastructure support, running nodes and validators, and staking in innovation projects. Meanwhile, the other half of the business will include supporting early stage projects, decentralized finance, NFT, and metaverse ecosystems. The new business will be funded internally, and the company has allocated approximately 10% of its own crypto assets in its treasury towards Argo Labs. The company has also hired Vikasen Mahalingam as head of Argo Labs. Our vision at Argo Labs is to support the company's mining efforts by engaging the disruptive and innovative sectors of the ecosystem. Our vision at Argo Labs is to support the company's mining efforts by engaging with the disruptive and innovative sectors of the crypto ecosystem, Mahalingam said in a statement on Wednesday. Strategic diversification. That's not to say Argo is losing its identity as a crypto miner, rather it's a strategic diversification, according to Sebastian Chalice, Chief Strategy Officer at Argo Blockchain. We still believe in Bitcoin, but there's the other side of the ecosystem that's really promising and building new applications every day, he said during an interview with CoinDesk. Crypto miners generate most of their revenue from mining, which makes them highly leveraged to the price of the digital assets they mine. This is apparent from a recent sell-off in publicly traded mining stocks, while Bitcoin and broader crypto markets decline after reaching their peak in November. In fact, Viridi, cleaner energy crypto mining and semiconductor ETF rigs, a miner-heavy exchange-traded fund, has fallen more than 50% since its peak in November, as Bitcoin price fell about 35%. Argo's shares, ARBK, in Nasdaq have fallen about 44%, while other miners such as Marathon Digital fell 66% since their November peak. Such diversification to supplement the mining business will likely help Argo gain exposure to not just digital assets they mine, but also from the rest of the blockchain projects. We're taking a portion of that Bitcoin that Argo mines and supporting other cryptocurrency projects, which we think further enhances our overall operations. Investors get that we are not just a straight mining company, we're a blockchain technology company, Wall added, noting that the company had previously made investments in other areas that aren't mining, such as $10 million in crypto venture capital firm Pluto Digital Assets, new fund. Future ready. One of the main reasons for Argo to launch this new business is to be ready for the future of blockchain technology. According to Chalice, there will be many innovations and trends that will be taking place over the next few years, which will change the blockchain ecosystem. And by participating in such projects now, Argo will be ready for the future, he added. I think it's a way for us to make UK Treasury wants to remove blockchain reference from crypto definition. New set of crypto regulations proposals in the UK aims to bring DeFi under the scope of the law on a case-to-case basis. See, I don't like the sound of this because to me it sounds like let's change the definition of cryptocurrency so we can make our CBDCs and call them cryptocurrencies even though they don't run on decentralized blockchains, they run on centralized servers. So brace yourselves. United Kingdom is actively looking to regulate the crypto market and has proposed many new policies to bring various crypto markets under the rule of the law. However, among the various proposed suggestions, what turned many heads is a request to remove blockchain and distributed ledger technology references from the definition of crypto assets. A new crypto report titled Crypto Asset Promotions Consultation Response from Her Majesty's Treasury noted that while most crypto assets use distributed ledger technology or blockchain as an underlying technology, this might change over time as the industry evolves. Thus, crypto assets must be exempt from the reference of distributed ledger technology to future-proof this definition for crypto asset definition change. The HM Treasury paper also discusses bringing decentralized finance under the scope of regulation for fast-growing industry. The official paper read, whether certain crypto assets lending activities or decentralized finance platforms are within the scope of a regime ultimately depends on the activity being carried out and promoted. As such, this will need to be considered on a case-by-case basis. Now, many crypto proponents believe that the removal of references to blockchain and DLT proposed by the committee could endanger the decentralized nature of a crypto market. For example, the Chinese CBDC, Digital Yuan, is said to be based on blockchain technology. However, it's more of a private blockchain, highly centralized, controlled by the government, and the British government seems to be following the same path. Regulators call for proof of work crypto mining ban. European regulators are concerned about the crypto's risks to climate change goals. Eric Fieden, vice chair of the European Securities and Markets Authority, has raised concerns over the growing use of renewable energy for Bitcoin mining. He called upon European regulators to take special exemption to proof of work mining, which is primarily used by Bitcoin and a few other forked altcoins. He also advocated for proof of stake as better energy efficient alternative, which it is. We need to have a discussion about shifting the industry to a more efficient technology, damn straight. Millennium Capital, a Paris-based alternative investment firm, has addressed the growing call for a ban on proof-of-work mining back in November 2021, calling it completely misinformed. The investment firm said that due to the decentralized nature of Bitcoin, there is no lobby or group to defend its interests. It should not be taken as an opportunity to implement measures rendering illegal as an industry for its lack of defensive powers. Bitcoin's network energy usage was one of the most controversial topics in 2021 and saw the likes of Elon Musk, Jack Dorsey, and Michael Saylor engage in several debates. Tesla even discounted the Bitcoin payment option, citing the Bitcoin's network's energy usage. However, unlike Thielen, most of the critics until now had no issue with clean energy usage. Musk has claimed that if 50% of Bitcoin's network energy comes from renewable sources, Tesla would rethink adding Bitcoin as a payment option. China's Bitcoin mining ban in May last year turned out to be a boon for the ecosystem, as it not only disintegrated the highly centralized Bitcoin mining industry, it also helped in moving towards renewable energy usage, according to the Q3 report from Bitcoin Mining Council. Renewable energy usage by the Bitcoin mining network, reached 58% by the third quarter of 2021. Turkish ruling party holds meeting in metaverse, talks crypto regulation. Turkey's governing political party has discussed the upcoming crypto regulation in its first metaverse meeting. AK Party, Turkey's governing party, held its first metaverse meeting on Monday, wherein it discussed upcoming crypto regulation. The Grand National Assembly of Turkey, TBMM, hosted its first meeting in the metaverse. Attending the virtual meeting were TBMM Group Deputy Chairman Nahir Ünal and Mustafa Elitas, along with Ömer Eleri, Vice President of the AK Party, responsible for information and communication technologies. Physically, Elitas attended the meeting from the parliamentary building, while Ünal and Eleri were at the AK Party headquarters. Crypto regulation was the highlight of the meeting. Ünal told state-run news agencies AA, adding the crypto asset requires both financial and legal regulations. Elitas, who recently hosted a meeting with representatives from the Turkish crypto ecosystem at TBMM, stressed that it's impossible to stay out of a virtual world, and I believe that the metaverse-based meetings would be improved expeditiously and become an essential part of our lives. Elitas also expected to meet with Binance Turkey on Thursday, as reported before. Binance Turkey was fined 8 million Turkish lira after failing an audit for monitoring anti-money laundering compliance. As blockchain technology made digital ownership possible, Turkey has sped up its metaverse efforts, O'Leary said. Seeing metaverse as a nascent yet quickly developing field, he predicted that it could impact many industries in the future. The metaverse is open for development in virtual reality, product management and innovative business models, O'Leary noted, adding that AKP wants to pave the way for a metaverse ecosystem. O'Leary argued that the digital and technological advances have legal, economic, and social aspects. AKP is striving to develop policies regarding crypto assets and social media to protect the citizens while empowering Turkey's innovation capabilities. While the Turkish government is keen on the blockchain technology and a central bank digital currency, Turkish president is known for his stern stance against cryptocurrency. Last year, in a public Q&A, he declared war on crypto, saying we have absolutely no intention of embracing crypto.